Certainly it's a unique situation currently with the divergence in valuations between developed markets and emerging markets, and in particular the US markets versus a number of emerging markets around the world. The valuation gap is about as wide as it's been. We saw it narrow a little bit this year and then it's widened out again. And we think that's a unique opportunity for investors to consider investing in these markets. Although they're not growing as fast as they have been, the valuations certainly indicate the slower growth. They are still growing faster than the US at around 5%. The other unique feature is just how much the US dollar has appreciated over the last 16 months or so, giving US buyers that much more buying power in these markets as they convert their US dollars to foreign currency as they're purchasing these securities. The reason why you've seen the divergence over the last few years is you've had pretty strong growth in the US. You've seen China slow down to a certain degree. I think from a sentiment standpoint, the US market has done very well and the currency has appreciated. So there's a good reason why capital has flowed into the US. The question obviously an investor needs to ask is, at what point do they take the appreciated gains and the appreciated currency and consider moving that into more value-oriented markets? We're value investors and we're spanning the whole globe looking for opportunities. And what we're seeing is growth at very cheap prices outside the United States, coupled with this increased buying power, and we think that gives investors a unique opportunity. So valuations are pretty unique currently in places like Korea. Brazil, which is suffering from more of an economic situation that's difficult, obviously is quite cheap as well, but we're seeing pretty broad-based opportunities. China is its own unique situation with valuations that are very stretched. However, most investors are not going to be accessing the Shenzhen or the Shanghai Stock Exchange. In fact, the Chinese securities trading in Hong Kong are still trading pretty reasonably and reflect the declining growth rates that we see in China. So we think that there's some attractive investments there as well. Southeast Asia looks interesting, but what we think is particularly of interest is the changing dynamic in corporate governance. And currently, the disconnect or valuation gap in emerging markets versus developed markets could somewhat be attributed to the differences in perceived corporate governance. We're seeing an improvement there, and in particular, currently, we are telling our clients to pay close attention to what's happening in Korea. There's a very seminal case happening in Korea related to the Samsung affiliates, and it'll be interesting to see which way the government votes its shares in this particular case. If they vote against this transaction, which is between Samsung Chil and Samsung C&T, that's a pretty good indication that the Korean government is taking corporate governance more seriously and should give long-term opportunities to investors.